What better way to finish off your Wednesday, your Thursday, your Friday, whatever day you're watching this video, than talking about Nvidia, the head of the AI revolution. Now today we have a lot to cover. Mainly, I think Wall Street still may be missing the mark, and as an engineer, I like to see visualizations, I like to use numbers, I like to use data to tell a story, to paint a picture. You see what looks like a monstrosity on the screen right here. It's rather scary, rather overwhelming, a lot of things happening, and we're gonna get to this and why it's so important to understand. And then we're gonna talk about how grossly Wall Street may be underestimating Nvidia, AMD, and Broadcom right now. And what better way to start off this video than listening to Jensen Huang, the godfather of the AI revolution as we know it, CEO of Nvidia. What does he have to say about Nvidia and their position in this AI arms race?
Well, Nvidia is at the epicenter, or the engine of the largest industrial revolution in human history.
Well, there's certainly no shortage of Jensen Huang absolutely aura farming on every news outlet or social media platform that he speaks on. But what's important is Nvidia is the epicenter of the next industrial revolution, the biggest human history has ever seen. And you can see depicted in this image here, we have basically a summary of all the deals that have happened in the AI space thus far, even though there are some missing here. The idea is almost every arrow on this chart is pointing to Nvidia in one way or another. After all, they're providing the chips for literally everybody. Now, to start this conversation and really build towards understanding Nvidia's valuation and how Wall Street still may be missing the mark, we gotta talk about what drives a stock price higher. We're gonna keep it nice, simple, and quick here. A stock price moves higher as earnings move higher. In other words, the company's profit goes up. Now, there can be short-term jumps, euphoria around investor sentiment, big time news that's over anticipated, whatever it is. But always, if the underlying business isn't growing their profit, isn't growing their revenues, then they'll come back down to earth. What does this chart remind you of? Does this look familiar? You probably guessed it. That's GameStop. Now, why do I bring up GameStop? Because yes, you can have euphoric movements that are based on literally nothing fundamental other than causing Wall Street to absolutely shit themselves and cover their shorts on GameStop, like what happened in 2021. But as you can see, as earnings, as revenues at GameStop decreased, let alone didn't grow, the stock followed just about that same exact path, right? Now we have Nvidia. Now, why has Nvidia been pretty much in the strongest uptrend on the entire market over the past 2 years? Well, you can see their earnings and their revenues have been absolutely skyrocketing, largely because they're the epicenter of the next industrial revolution, the intelligence revolution, right? And so I could bore you with all the financial terminology and all the nerdy stuff, but why don't we just skip to the point here? Here's the bottom line. The current year, fiscal year 2026 or 2025, the average analyst estimate for revenue is about 200 billion, from 193 to 225 billion. Now, the great part about Nvidia is we really don't even have to make an estimation. We pretty much know exactly what numbers are going to come in. And I'll let the founder and CEO of Grok, Jonathan Ross, explain that to you in about 5 seconds.
Now, every year, Nvidia builds about 5.5 million GPUs. If they had the ability to build 20 million, they would sell 20 million. That means that it's completely supply constrained.
In other words, they're going to sell every chip they make, and that's great because we basically know exactly how much revenue Nvidia is going to bring in from these numbers. We're smart people around here. We like to use numbers, so let's take a look. And you can see how our range here, which I'd argue is pretty conservative, is pretty significantly above the analyst estimates. Now, why is that? Again, I think this is where, and we talked about this in the last video in a lot more detail, but I think this is where some Wall Street analysts can't see the forest from the trees. There's so many things going on. There's so many moving pieces in this AI arms race. But at the end of the day, Nvidia is the driving force of everything. Now, there are problems, there are risks, right? And we'll get to the risks, but let's keep moving along with this analysis. So we understand what their earnings are going to be, somewhere between 212 and 242 billion, right? About 10% above where the analysts, the experts on Wall Street sit. So if we know their earnings are going to significantly beat Wall Street estimates, then why isn't the stock pricing that in? Well, I'm glad you asked, because the market likes to price things into the future, right? We don't price things in today's dollars. In some cases, we price things 6 months, 1 year, sometimes even 5 to 10 years in the future, like what's going on at Tesla. Tesla isn't selling enough cars to be trading at a 1.4 trillion market cap. That's obvious to everybody. But the hope is robotaxis, Optimus, all these great things will come to fruition. They'll hold the majority of the market share. And hoorah for all the Tesla shareholders. Anyways, that's a topic for another video. We need to talk about how analysts are guiding future revenues and earnings for Nvidia. And that's unknown, right? How could we ever estimate that? That's just a random guess. I'm going to use the term unknown pretty lightly here because, like we talked about with the revenue, it's actually not as difficult as you might expect. Now, Jensen Huang has told us, he's warned us that this demand is coming. It's a waterfall. Most analysts are projecting data center spend to be somewhere between 600 and 700 billion by 2028. Jensen Huang says, no freaking way, 1 trillion by 2028, and maybe even 3 to 4 trillion by 2030. Yes, you heard that correctly. 3 to 4 trillion by 2030. That sounds absolutely absurd, but can we doubt this man? After all, it sounds ambitious, it sounds optimistic, and albeit he has a vested interest in the industry, in the growth of the industry, his company is literally the epicenter of the AI industrial revolution, right? But he does have the best pulse as well. He talks to executives at these AI companies. He sees what's going on across the space every single day. So there is some merit to what he predicts, to what he forecasts, and it's a big number. And as you also might know, Nvidia has a pretty strong grip on this industry. About 92% of the AI data center chip market in 2024. And now this will decrease with time, right? Naturally, if there's this much demand and Nvidia can only provide 5.5 million GPUs in 2025, then somebody else is going to have to step up and compete. And that's going to be your AMD. We just saw they announced a massive partnership with OpenAI. They pretty much tripled Wall Street forecasts with one singular deal with OpenAI. And we also saw Broadcom is actually going to be developing customized AI accelerators for these big OpenAI data centers. 10 gigawatts, that's nothing to scoff at. Your typical conventional nuclear reactor, those massive ugly things you see on the side of the road, those things are 1 gigawatt. So 10 gigawatts of power is a lot of power, more than what's required to power all of New York City, a city with over 8.5 million people. So the point is, competitors are taking a share. Nvidia is not going to be able to maintain a 92% market share. I thought this was an awesome way to simplify things and make it easier to understand just how much money we're dealing with when we put how much revenue these companies, these chip designers are going to make per gigawatt of data center that they can deploy. So obviously Nvidia has the highest premium. We've talked about why Nvidia's competitive moat is so high and why they can charge the price that they do in this video here. Check it out if you're interested in more of the technology and the technical lingo there. But right now they can generate 35 to 40 billion per gigawatt. AMD's Helios platform is about 20 billion. Broadcom is about 27 billion. So these companies are making a lot of money. And you know, as these deals continue to be announced, it starts to become a whole lot more transparent and predictable just how much revenue these companies are bringing in. And that's exactly what we're trying to find out, right? We know what the average estimates are. We know that Wall Street sees 193 to 224 billion, which is a pretty gross underestimation of the information that's actually available on the market right now. So are they doing it on purpose to hopefully boost Nvidia's stock price when those earnings do beat and they raise their forecast? Possibly. But how about we do some math ourselves? And I'm going to make this this super simple, I promise. If you're interested how we derived these numbers, these estimates right here, these are fancy Wall Street estimates for revenue going forward in the coming years. We use Jensen's estimates of how much money he sees coming in the form of data center spending, and take 60% of that, because about 60% of data center spend is allocated to GPUs and Nvidia stuff. So you'll notice these numbers here are about 60% of what Jensen Huang predicts the data center spend will be in that year. 2030 was 3 trillion, 1.8 trillion would be 60% of that. You get the point. Now here we have two estimates, right? We have Jensen Huang's dream, his ultimate vision of maintaining a 90% market share of the AI GPU space. And then we have a much more conservative estimate of 60%, which I don't think will ever happen. But again, you never know. It comes down to execution at the end of the day. Will Nvidia continue to win? Probably. They're absolutely primed for it. It will most likely be somewhere in the middle between these two. But the numbers themselves aren't too important. We're not going to compare just how high these estimates are to Wall Street's, because it's pretty funny, the underestimation that they're making. I mean, these numbers are just based on what Jensen predicts, which again, he has a far better idea of what data center spend might look like in 2026 than a guy in a suit sitting at a desk on Wall Street would, right? And this is where it gets super interesting. Again, simply put, this number here represents their average growth rate, their average growth in revenue over the next 5 years. To simplify things, we're just going to assume that their profit margin remains constant. Will that be the case? Maybe not. Maybe competition will force their price points down. Maybe somehow they'll optimize things even more where they can produce an even higher profit margin. And in that case, everybody is way far off with where Nvidia will go in the future. But anyways, these growth rates right here, let's see how they compare to Wall Street. 52% in the aggressive case. In a conservative case, based on the numbers that Jensen Huang himself has provided to us, is about double what we see on the street. Now, we're not going to overcomplicate this. We're going to actually keep this very simple. Right here, you see a list of your favorite companies, your Teslas, your Palantirs, your Microsofts, and of course, Nvidia. This PEG ratio is commonly used to see how much people are willing to pay for a company's growth. Obviously, Palantir, a company that's growing very quickly, one of the fastest growing AI software companies in the world, and it also helps that they're in the AI space with an AI product, a profitable AI software. You never see that nowadays, but people are willing to pay a hefty premium for their growth. As we talked about with Tesla, people are willing to pay a lot of money because Optimus, because robotaxis are gonna save the day and bring revenues to new heights. Microsoft at a more digestible 2.26, which is about average for the industry. What would you guess Nvidia's is? After all, we're in an AI bubble. Nvidia is overpriced. You should sell now. What do you think Nvidia's trading at based on the numbers we just talked about? 1.15. Now, again, we didn't get into the details. You can look up how to calculate a PEG ratio. It's very simple, but boring to go over. And so that's why I'm going to leave you with just this number. Based on our estimates, the PEG ratio ranges from about 1 to 1.3. And so I went with the midpoint 1.15 as our best guess. Now, I don't know about you, but I think it would be a fun exercise to see, okay, well, based on the price that investors are willing to pay for Nvidia's growth right now, what would they be priced if investors were willing to pay the Tesla premium or the Palantir premium? I'm glad you asked. It's very stupid. Now, why is it unreasonable that Nvidia would ever trade at $12.60? In other words, about 7 times where they sit today, which if they're sitting at a market cap of what, 4.5 trillion today, times 7, you're looking at about a $32 trillion company. It's impossible to even imagine the scale of money, the scale of valuation that we're talking about. And that does feel impossible. But again, this is just a fun exercise to see if investors were willing to pay for the growth rate that they are for Tesla and apply that same logic to Nvidia, we'd be sitting at a share price of $1,200 versus today of 180. Now, this case seems a lot more feasible. Yes, is it absurd to imagine a company worth $9 trillion, basically worth more than every single country on the goddamn planet, by GDP? Yeah, it's absurd to think about. It's impossible to fathom. But is it possible? Of course it's possible. Anything is possible in this market, especially when things come to euphoria. And so I think a conclusion we can reach here is that Wall Street right now, based on the vision of Jensen Huang, who is the CEO of Nvidia, who is the driving force of the AI revolution and all AI spend, so probably the best source of information to take from, we are potentially sitting way below where we could be if things start to heat up, if a few more catalysts come out, and investors start to see and imagine the growth story once again. We'll have to see if there's even enough money in the system to push Nvidia to higher and higher highs, but you get the idea. And again, one other thing to consider that we briefly mentioned earlier is that we assumed constant profit margins. But as Nvidia continues to roll out these new platforms, these new hardware refresh cycles, just like the iPhone, right? You go from iPhone 15 to iPhone 16, and the only thing you added was a little bit more storage and a little bit more battery life. The same exact thing is happening right now with Nvidia's GPU cycles. Their Blackwell did very well with a price point of around $30,000 to $40,000 per chip, selling 5.5 million of them. And their next platform coming out by 2026, it's right around the corner. Can you believe it? Rubin Ultra, selling for $70,000 to $80,000 per chip, which is about 3 times as much as Blackwell's income per die. This stuff is, again, it's hard to fathom how absurd these numbers are and how quickly Nvidia is growing. And that's pretty much all banking on OpenAI paying off. Will you, the consumer, pay for some AI service that generates these companies a ridiculous amount of money to make up for the now $20 billion that OpenAI has lost? It's looking that will be the case right now. Obviously, things can change. You have your own opinion. I'd love to hear it. Do you think we're in a bubble, or do you think these numbers are justified? These are coming from Jensen Huang himself, the best pulse on the entire industry. Albeit he's biased, but I feel like at this point with Nvidia's performance over the past 5 years, you kind of have to buy what he's putting out there. And it's not just the things that he's saying, because anybody could go out in front of a large group of people like Jensen does almost every day and say, hey, we're doing great, we're growing really fast, we're seeing a ton of demand, but the demand is, a couple years out, at least for the profit for these software AI companies that aren't making any money right now. But actions always speak louder than words, and that's exactly what he's doing. They're putting all their eggs in this basket, securing 70% of TSM's advanced packaging capacity for 2025, and they're pretty much forcing TSM to build a whole new factory just to catch up with all the demand that they're seeing for this next generation of Rubin chips, building out this new factory in Arizona, part of the Trump reindustrialization of the United States. They're literally buying out all of the high bandwidth memory they can, because in order to maximize these chips' performance, you need a lot of memory, and Micron has completely sold out. They're investing $100 billion into OpenAI. That's no chump change, although it is pretty easy to do this because OpenAI is going to have to spend, 30 to 40 billion per gigawatt. So that's going to be anywhere from $300 to $400 billion in revenue for Jensen. He knows that. It was an easy decision. We have the biggest asset manager in the world in BlackRock with over 13 trillion in assets. We have some of the wealthiest sovereign wealth funds in the entire world, some of the biggest big tech companies, all teaming up in the AI infrastructure partnership to build out data centers. I mean, everybody's in on this. And Jensen Huang and Nvidia are in the middle of it all, the engine of the next industrial revolution. Now, with earnings coming up, why don't we run a quick test? How does Nvidia usually perform after earnings? Especially as we know they have drastically outperformed Wall Street's expectations time and time again, and continuously raised their forecast to higher and higher highs, and surprising everybody. All right, so here we have our fancy little system. Let's go back to more or less the ChatGPT moment, right? What was that, 2023? We'll go back to January 1st and run it up to today. What kind of results are we looking at if we buy on earnings day and sell 30 days later? Again, just an experiment to see how Nvidia will perform right after they report. We'll use $10,000 to make it nice and easy. I'm sure you got that kind of change rolling around your bank account, right? 100% risk per trade. Let's run the back test and see what we get. Not too shabby, right? You finished from a $10,000 start just about 2.5 years ago. You have about 24,000, 142.5% over that period. But what you will notice is we actually lost more trades than we won. Is this a sign that investors tried to price in these massive beat in raises before earnings happen? Probably. You can see the worst trade was about 17.4% after 30 days. This was during liquidation day, Trump's big tariff announcement, right? So every stock was down massive. And then our best was 40%. This is just a spread to show how strong the strategy actually was, and it looks pretty good. Green means good. And we had an outperformance of the SPY of 60%. So obviously very strong compared to the SPY. But what I will tell you is if you just held Nvidia, you'd be way up here. If you bought on January 1st, 2023 and wrote it up to now, you'd have about $124,000 as opposed to 24,000 using this trading strategy. But again, just trying to prove a point that the earnings strategy, just purely buying Nvidia on earnings day, selling 30 days later, has absolutely destroyed the market. So do with that what you will. I'd love to hear what you guys think. Do you think Wall Street is truly and grossly underestimating the potential in the revenue and earnings coming with Nvidia? Do you think Jensen's lying to us just to get that stock price higher? I'm not so sure about that, but I'd love to hear your thoughts. And at the end of the day, it all comes down to execution. If Jensen Huang and Nvidia can't seem to figure things out, to maintain their crazy profit margins, to maintain this high market share, then basically this whole argument falls apart, and you certainly will never see a $32 trillion company. 8 trillion, maybe sooner than later. I guess we'll have to wait and see. Appreciate you guys watching as always, and I'll see you in the next one. Bye-bye now. Bye-bye.